Day Team GCI. I'm Brad Alexander, and in today's GCI Market Outlook, let's take a look at Forex trading on Bitcoin, WTI Crude Oil, the FTSE100, the NASDAQ, the Dow Jones Industrial Average, and the S&P 500. Last time we looked at the NASDAQ nearing all-time highs. It looks like the S&P 500 is almost there as well. Before we look at that, don't forget to like, subscribe, and get notified on YouTube, Facebook, and Instagram. Let's take a quick look at the US indices then. The S&P 500 is very near all-time highs, and so is the NASDAQ. Basically, this shows that investors are ignoring Donald Trump's tariff threats, so let's see if he follows through. The Dow Jones Industrial Average is still in a symmetrical pennant, but if we assume that the same optimism will carry over from the other indices, we may look for a move to the upside. The stochastic oscillator is oversold and turning up, and we are in mid-range in this pennant. Speaking of indices, price action on the UK FTSE100 has had a pullback in this bull run and is almost at the lower trend line. We also see the stochastic oscillator looking very oversold. Whether you are tracking indices, forex, or commodities, we have a mountain of economic news this week, so check your calendars. Please note that the timing of this calendar is London time, GMT. This week we have interest rate decisions from Australia and New Zealand, CPI from Canada and the UK, PMIs from Europe, the UK, and the US. So, lots of opportunities to look for counter-trend moves to let us trade with the trend at a discount. Last time we looked at a short trade on WTI Crude Oil, and look what happened. If we move out to the daily chart, we can see price action is at support, but there's a major key level below at $67. We see a range trading opportunity on Bitcoin between $95,000 and $98,500. As you know, cryptocurrencies are quite volatile, but you may want to use the technical indicators to time your entry and exit points. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.